Asian currencies are broadly weakening as escalating tensions in the Middle East, particularly involving Iran, are pushing investors towards safer assets. The Chinese yuan has also come under pressure after recent economic data missed market expectations, adding to the fragile sentiment in the region. This combination of geopolitical uncertainty and macroeconomic concerns is weighing on risk-sensitive currencies across Asia. The recent military developments in Iran have heightened investor caution, leading to a shift towards safe haven assets like gold and the US dollar. The Japanese yen, typically a beneficiary of risk-off flows, has seen limited gains due to the overall fragility of market sentiment. The South Korean won and the Singapore dollar have both declined, while the Indonesian rupiah has hit its weakest level in weeks. Analysts are closely monitoring the situation, noting that a lack of clear diplomatic progress could further amplify the pressure on regional currencies. The Chinese yuan has weakened past the 7.25 per dollar level following the release of November economic data, which showed industrial production and retail sales figures below market forecasts. Although the data still indicated moderate growth, the miss has raised concerns about the pace of China's economic recovery. The People's Bank of China has set a slightly weaker midpoint fixing for the yuan, signaling a tolerance for gradual depreciation. This move suggests policymakers are allowing the currency to adjust in response to market forces. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Market participants are now watching for potential policy measures from Beijing to support growth, including possible rate cuts or increased fiscal spending. The yuan's performance will be closely monitored as a key indicator of China's economic health and policy direction. A continued slide in the yuan could signal deeper concerns about the country's economic momentum, which would likely weigh on other Asian currencies as well. The broader market implications of these developments are significant. The combination of geopolitical tensions and disappointing economic data is creating a challenging environment for emerging market assets. Investors are weighing both the regional security risks and the macroeconomic outlook for Asia. The flight to safety has reduced appetite for risk-sensitive assets, with currencies like the Australian dollar and the Indian rupee also showing signs of weakness. The current environment is marked by uncertainty, with the potential for further volatility if tensions in the Middle East escalate. A deterioration in the situation could trigger a broader sell-off in emerging market currencies and increase demand for U.S. Treasuries and the Swiss franc. The yuan's depreciation is also a concern for policymakers in China, as a weaker currency could impact trade and inflation dynamics. The next key signal to watch is whether China's central bank introduces new stimulus measures to support economic growth. A policy response could either stabilize the yuan or allow it to continue depreciating. Additionally, any further developments in the Middle East could trigger renewed market turbulence, with Asian currencies likely to be among the most affected. The performance of the yuan and other Asian currencies will also be influenced by global economic conditions. If other major economies show signs of slowing growth or increased inflationary pressures, the demand for safe haven assets could remain elevated. This would continue to weigh on Asian currencies and limit their recovery potential. Investors should also be monitoring the broader geopolitical landscape for any signs of de-escalation or renewed diplomatic efforts in the Middle East. A resolution to the current tensions could help restore investor confidence and reduce the pressure on risk-sensitive currencies. Until then, Asian currencies are. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Likely to remain under pressure, with the yuan's performance serving as a key barometer for regional economic sentiment. The next signal to watch is the release of additional economic data from China and the potential policy response from the People's Bank of China. A stronger-than-expected data release could stabilize the yuan and reduce concerns about the country's economic recovery. Conversely, a further data miss could deepen the pressure on the yuan and other Asian currencies. The evolving situation in the Middle East remains a key wildcard for the region's currencies. Any further military posturing or diplomatic developments could trigger renewed market volatility. Investors should be prepared for potential swings in currency markets as the situation unfolds.